Something impossible is happening. Gold is falling, silver is falling, stocks are falling at the same time. This has only happened a few times in modern history, and every time it came before a financial shock. Investors are not buying assets anymore. They are running toward one thing only: cash. And when everyone wants cash, it means fear is in control. But the real question is, what do they know that you don't? For decades, gold was the safe haven. Stocks were the growth engine. Silver was the industrial bet. They were never supposed to crash together. When stocks fall, gold usually rises. When currencies weaken, silver usually climbs. But now, everything is collapsing at once. This is not normal market behavior. This is panic behavior. It means investors are selling everything they can just to hold cash, not to invest, not to grow, but to survive. And that is the first warning sign of a coming storm. In every major crisis, there is one pattern, and now again. When fear rises, investors don't want assets. They want liquidity. Cash gives freedom. Cash gives control. Cash gives time. Gold can drop. Stocks can crash. Crypto can vanish overnight. But cash lets you escape first. Right now, hedge funds, banks, and institutions are doing something dangerous. They are pulling money out of everything. Why? Because when multiple markets crash together, it usually means something is breaking behind the scenes. And when insiders smell danger, they move before headlines appear. If this continues, the next phase won't be a crash. It will be a freeze. Gold is supposed to be the final shield. Silver is supposed to survive inflation. Stocks are supposed to grow long term. But today, all three are bleeding. This means one terrifying thing: there is no place to hide. When everything falls together, it suggests debt pressure is rising, liquidity is vanishing, institutions are forced to sell, not because they want to, but because they must. Margin calls, loan obligations, emergency exits. This is how financial avalanches begin, not with explosions, but with quiet selling. The biggest crashes start when markets look calm, not when they look violent. Look back at history. Before the 2008 crisis, investors rushed into cash. Before the COVID crash, everything sold off at once. Before major recessions, gold, stocks, and commodities fell together. This pattern appears only when trust disappears. Not trust in companies, not trust in governments, trust in the system itself. And when that trust breaks, people don't buy opportunities. They prepare for impact. Every great crash begins with one sentence: this time is different. Markets are not logical, they are emotional. When fear spreads, people stop thinking long term. They think about survival. Right now, the psychology is shifting from how much can I make to how much can I lose. That is the moment when bubbles burst, not because prices fall, but because confidence dies. And once confidence dies, selling feeds more selling. A loop of panic. The scariest crashes don't look scary at first. They look quiet. If this trend continues, three things usually follow. 1. Credit tightens. 2. Markets become unstable. 3. Volatility explodes. This doesn't guarantee disaster, but it always signals risk. Smart investors don't panic. They prepare. They reduce exposure. They wait. They watch. Because in chaos, opportunity is born, but only for those who survive first. The market doesn't reward bravery in crashes. It rewards patience. When gold, silver, and stocks fall together, it's not a coincidence. It's a message that fear is spreading. A message that liquidity matters more than profit. A message that something is changing. History shows us one truth. The biggest financial events don't begin with headlines. They begin with behavior. And right now, investors are behaving like something bad is coming. The question isn't whether markets will recover. The question is, will you be ready when they don't? Because when everyone runs for cash, only those who planned ahead stay standing.